If you're new to real estate investing, or just curious how investors qualify without showing personal income, you're in the right place. Hit subscribe. Money House Media breaks it down step by step. What if I told you that you can buy or refinance a rental property without ever showing your job, your pay stub, or even your tax returns? Welcome to the world of DSCR loans. It's designed for real estate investors who want to qualify based on the income the property makes, not your personal paycheck. If you've never heard of this before, don't worry. We'll walk you through it from the ground up. Traditional banks only look at your W-2 income or tax returns. So even if your rental is profitable, if your tax return shows a loss or your income's irregular, they may deny you. That's why DSCR exists. And if you're just starting to learn about this, you are not alone. Donna and Ron had 3 rentals that were cash flowing, but their CPA wrote off every expense to lower taxes. Now their AGI showed a loss. Their refinance was denied, and they missed out on $500 a month in savings. That is, until they found a DSCR loan. And yes, they were brand new to this type of loan too. It feels like a slap in the face. You're running a profitable business, but lenders say you're not qualified? DSCR loans change that. And this might be your first time hearing the term, but by the end of this video, you'll understand exactly how it works. DSCR stands for Debt Service Coverage Ratio. Don't worry if that sounds technical. It's just a way for the lender to measure whether the rent from your property is enough to pay the mortgage. If the rent covers the debt, you qualify. Example: if the monthly rent is $2,000 and the total monthly housing cost is $1,600, the DSCR is 1.25. That means you're making 25% more in rent than the mortgage costs. Lenders love that. Let me break down the typical range lenders are comfortable with. 1.25 plus DSCR, GIR, strong cash flow. You get the best pricing. 1.10 to 1.24, acceptable, but you may see slightly higher interest rates. 1.0, break even. You may still qualify, but with tighter terms. Below 1.0, riskier. Some lenders may still approve if you have extra savings, called reserves. Don't worry if this is your first exposure to these numbers. Just think of DSCR as a score that compares rent to mortgage cost. That's right, no tax returns, no W-2s, no pay stubs. Instead, lenders look at a lease agreement or rental market analysis to see if the property cash flows. This is perfect for new investors who are just starting out, or for self-employed folks who don't show a lot of income on paper. Now, don't be surprised if different lenders have their own extra rules, called overlays. Common ones include minimum credit scores around 660 to 700, minimum loan amounts of $100,000 or more. A cap on how many properties you can have financed requiring savings to cover 3 to 12 months of payments. If this sounds overwhelming, don't worry. These are normal guardrails, and your mortgage advisor can help you navigate them. Most DSCR lenders want 20% to 25% down. A few allow as little as 15%, but with higher rates. Reserves? That just means you have enough in the bank to cover 3 to 6 months of housing costs. That makes you a safer borrower in the eyes of the lender. And even though you don't need tax returns, you will need documents like lease agreements or projected rents via appraiser. Purchase contract bank statements for down payment and reserves LLC docs if buying in a company name. Valid ID and credit authorization form. It's less paperwork than traditional loans, but it's still a real process. Let's talk rates. DSCR loans usually run about 1% to 2% higher than conventional loans. So if conventional is 7%, you might be looking at 8% or 9% on a DSCR. That's the trade-off. You skip the tax return requirement, but you pay a bit more in interest. For many investors, the flexibility is worth it. Think of DSCR as your foot in the door. You buy or refinance today, then later, once your tax returns are cleaner or the property value increases, you refinance into a lower rate loan. Or maybe you sell the property and walk away with profit. That's your exit strategy. Just remember, refinancing depends on market conditions and personal financials down the road. Donna and Ron were new to all this, but with help, they used a DSCR loan to refinance, saved hundreds per month, and turned that into the down payment for a new duplex. They weren't experts, they just had the right guidance. If you're a beginner investor, this loan might be perfect for you. It's also great for self-employed borrowers, retirees with rental income, anyone who owns 5+ properties already. Even if this is your first time learning about DSCR, don't feel behind. You're ahead just by watching this video. Harmony and Chris were new investors too. They bought a 4-plex for $600,000. Rent, $6,400 month mortgage, $4,900 month DSCR, MON 130. They didn't need to show income. The property qualified on its own. That's the power of DSCR. There are a few other investor-friendly loans, but here's the simple version. DSCR. Qualify based on property rent. Bank statement. Show business deposits instead of W-2 bridge loan. Flip property fast. Conventional. Best rates, but requires perfect documents. If you're a rookie, start with DSCR and grow from there. The market moves fast. If you wait, rates may rise or properties disappear. The sooner you understand DSCR, the sooner you can make a smart move. Want to explore DSCR for your next deal? Download our free DSCR checklist below. And hit subscribe so we can keep simplifying real estate for beginners like you. And for first-time investors, this might be your chance to start. If you like the content on this video, please smash that like button and subscribe, and follow us on YouTube, Facebook, and Instagram. Also, click the link below and get our free home buying guide, the correct title vesting and reverse mortgage roadmap. Here's a quote by Louis Glickman. "The best investment on earth is earth. This for educational purposes only, and it is not a financial advice." NMLS number 1020597.